Okay, everyone, is it safer to own Yieldmax or YieldBoost for this new market recovery? Okay, what's the safest, best way to play this market recovery? Okay, is it with Yieldmax or YieldBoost? Because obviously YieldBoost is coming out with new funds. Yieldmax and YieldBoost helped me earn over $500,000 per year in dividends, as you can see below, and we're outperforming the indexes today. We were down 10,000 to start the day, and now we're up 11,000. Same trend as in the last live. We're at 0.83%. If you look above, that's blowing away the indexes. All right, and that's not even factoring in margin, which, as you can see below, is around 360,000 in debt now. So even with this leverage, we're outperforming the markets. You can go see for yourself right here in our performance tab. A lot of people said Todd's cooked, Todd's going to reach a margin call, but we're down 6.5%. That's in line with the S&P now. I told you we want to be, it's a little bit over the S&P. I'll tell you, we want to be in between the S&P and the NASDAQ. So we're still living financially free out of our brokerage accounts using Yieldmax, YieldBoost, and margin. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. So we have the chat filling up here, and I'm going to answer all the questions in the chat. I'll get to those questions at the end of the video. If for whatever reason the video goes too long, because my videos have been going quite long lately, then I'll just save that Q&A for the next video, and I'll get to all of your questions once again in that next video. So go ahead, write your questions down. I'm going to save them, and I will get to your questions in the order that I received. All right, so once again, we're up 0.71 today. We're using some Yieldmax, we're using some YieldBoost, but how should we be positioning our portfolio going forward if this market is truly recovering, okay? And once again, Yieldmax is quite risky, some people would say, and YieldBoost, some people would say, is kind of risky, but I have some things that I want y'all to consider. I have 5 key points I want y'all to consider when you're trying to make your decision on buying Yieldmax or YieldBoost, or maybe a combination of the two. We're going to get into that right now. So the big key with Yieldmax, as you all know, is it's low. I'm sorry, I have Defiance on the screen. That is low maintenance. The big key with Yieldmax is that it's high maintenance. Okay, so QQQY has 30% maintenance. All right, that's why I've always parked so much of my money in Cornerstone. Defiance. Okay, and so I parked so much of my money in Defiance, and I just did a podcast with Ari. So I've been talking a lot today. I apologize. Stay tuned for that. It's going to be out on Monday. All right, I think you're going to really enjoy that podcast. And Ari Gutman, once again, go check out his channel. He does stocks, and so his YouTube channel, just Ari Gutman. I met him at the conference. He does a lot of stocks. I combine stocks with my strategy. And then also I use Yieldmax and YieldBoost, which they use stocks, but they just use synthetic versions of stocks, good old fashioned stocks. They use synthetic versions to get these really high dividends. But the key is they have high maintenance, okay? If you need help understanding maintenance, that's in my volume 3 e-guide. Maintenance is how I live and get ahead in the market, okay? I live out of my brokerage account with maintenance, okay, low maintenance. And I also, get ahead with low maintenance, because if I can buy many low maintenance names, well, then obviously I can use more margin without the risk of a margin call. So QQY, low maintenance. But if you go to YMAX, and again, I love Defiance, okay? Defiance is one of my top holdings. We all know that I build most of my portfolio on Cornerstone and Defiance. It's probably why I slip up and mention them so many times. But YMAX, 50% maintenance, okay? That's huge, all right? So YMAX, 50% maintenance. Okay, YieldBoost, on the other hand, is, if we go to, let's say, YSPY for YieldBoost, which is Granite Shares YieldBoost, you'll see the maintenance is 75%. So the maintenance is higher for these funds, clearly, Yieldmax and Granite Shares or YieldBoost. However, there's a reason why maintenance is higher for some funds, okay? Granite Shares is tied to triple leveraged ETFs, okay? And people would say that's risky. However, Yieldmax is tied to high beta stocks. So which one is risky? Which one is the more risky play? Which is the safest way to play this market recovery, all right? After all, again, people think margin is taboo, but I've already laid out how margin isn't taboo. That's how we're outperforming the indexes. Even with all that leverage, we're still in line with the indexes. There's a way to do it. That's in my Volume 3 e-guide if you need help understanding how I use margin with my account to live free. You have to follow the rules, but with the rules that we're following, we still have to have the right product mix, the right ETF mix. And so Cornerstone, Defiance, Roundhill, they're usually my top weighted. Yieldmax and YieldBoost are competing for spots in my portfolio. And Yieldmax, I currently have a little bit more of in my account because Yieldmax is 50% maintenance. And at other brokerages, Yieldmax can be lower maintenance. Okay, you go to Fidelity, you'll have lower maintenance for Yieldmax. Now, Granite Shares is higher maintenance for me, but they have more of an indexed approach. Okay, they're using indexes, whereas Yieldmax is using stocks. So stocks can always fall by greater amounts than the indexes, and stocks may never come back. The indexes will always come back. So that's one reason why I like Granite Shares over Yieldmax. They're tied to the indexes. Plus, these dividends are going to be huge. You see a 4% yield here, but E-Trade's never accurate with their yields. I hear the yields are going to be somewhere between 30 and 40% for YieldBoost, maybe even higher. All right, and that's the index version. So we need to wait on that dividend because these are still new funds. But if you want to play a market recovery, YSPY is up 0.45% today, and the S&P is up 0.26%. So you're getting days gains with YSPY. And I was alerting everyone this morning. I was alerting everyone on my Twitter and my SMS feed. Okay, I have members who buy my e-guides. You get my phone number when you buy my e-guides. You also get the Cornerstone rights offering announcement when you buy my e-guides. But if you don't want to use Discord, which is free when you buy my e-guides, we have over almost 2,000 members here in the Discord chat Pursuing the Fire Lifestyle. So if you're a little bit more old-fashioned like me and you don't want to follow my updates on Discord, my rights offering announcement updates for Cornerstone, which we'll get into later in this video. If you don't want to follow those, you can just use my SMS text system. So members usually upgrade to that. If you're a member of my Fire Portfolio channel, you can just upgrade to that. But I was also alerting on Twitter, so make sure you follow me here on Twitter if you want to see my latest buys and sells, okay? Not necessarily my latest buys and sells. I keep that for my members only, but these are just the thoughts that I'm thinking. And today I said tariff day, never seen something more anticipated, yet Wall Street always looks ahead 12 months, so I feel the event's already priced in, and I'm buying all of my top holdings on the dip this morning. So I alerted members of that 5 hours ago before the market rally, okay? And so usually I get my timing pretty close to near the bottom in the markets because I use charts and I use my allocations to tell me what to buy and sell. I was saying that with Ari on the podcast, and so it was an easy decision for me to buy. But nonetheless, follow my Twitter there if you want to see my latest thoughts on the market. Okay, and usually they're, I think, quite productive. Okay, so go here to the Twitter. I'm sure all my members are already in this, but go hit follow at Unconventional Wealth Ideas, at Todd Aiken UWI, right there. So once again, we have this sort of conundrum right now where Yieldmax and YieldBoost are competing for spots in my portfolio, but we really have to break down the inner workings of these funds to really identify if they are safe or not for this next market recovery. And I think the dividends always cash flow losses, as I always say. So if Granite Shares, falls because the market falls, well, we know the indexes will always bounce back. Certain Yieldmax stocks will not bounce back. Plus the dividends from this, which should be pretty hefty. Comment in the chat if you know the dividend yields or the expected yields for Granite Shares and YieldBoost. Okay, these dividends will cash flow all losses. So Yieldmax, you're going to have the same thing. You're going to have them cash flow all losses too. But the drawdowns in Yieldmax are much bigger. And when you're using margin, you want to prevent those drawdowns, okay? So yes, YieldBoost is tied to triple leveraged ETFs. However, I used to always buy UPRO when I was young, and that's how I got ahead. I was mentioning in the podcast today with Ari, with UPRO, all of my members know this. I had 10,000 in UPRO. I pretty much turned that into 100,000 over the years, okay, over the first 10 years of my life. But UPRO didn't give qualifying income to the banks for loans. I needed dividends to get a house, for my son, TJ, as I always say. So I needed dividend-paying funds, and I needed index funds at that. So Cornerstone was that fund that I found. Cornerstone is a 4-star fund, as you can see here on Morningstar. 4-star fund, 20% dividend. It went from 7 to 14 during Corona, so I got a double in CRF. We got the 20% dividend on top of the double, and we're getting these drips at the NAV, okay? 16% gains at the NAV every month. So we get a 20% dividend. We get the 18% drip at the NAV every month on top of the dividend, and we get the day's gains, which today you can see Cornerstone is up 0.28%, which is beating the S&P, as you can see above. So this is how we're really getting ahead. And we knew to sell out of Cornerstone at these highs up here because we got the RO announcement, the N2 filing at our Discord chat room. If you need help playing Cornerstone and understanding that, that's in my Volume 4 e-guide. Again, at Discord, we give you the Cornerstone N2 filing here and the rights offering announcement. And that's how we knew to sell at the highs, and then we reload back at the lows. And we are reloading right now currently. I've been alerting all of my members that I've been buying my top holdings. And again, I told you on Twitter that I'm buying all of my top holdings today on the dip. So this is the time to be reloading in Cornerstone, in my opinion. Okay, we know that the RO is coming, but you know how to play that with the premiums. You know that Cornerstone gives you that special drip in the meantime. So we're dollar cost averaging at the lows with Cornerstone, really outperforming this market once we get our next set of dividends. You're going to see it's at the lows of the market. It's always at the lows. It always drips at the NAV. But when the market's at the lows as well, well, now you're buying the market at the lows because Cornerstone is the index. All right, so know that I use UPRO and I use Cornerstone to get here, okay? Especially after Corona when I lost it all. Okay, I was down to $15,000. I had to use my dividends to get loans, SBA loan, as you know. And then I used Cornerstone and UPRO, and with my margin, that's how I got my account back up to almost $200,000, okay? So with that loan, with UPRO, with Cornerstone, okay, that's how I leveled up. And then we know with Cornerstone to just play the highs and lows because they telegraph them for you, okay? They tell you when to do it, all right? And again, if you need help with Cornerstone, that's in my Volume 4 e-guide. All right, so that's how we're getting ahead, but we can't put too much in UPRO because it doesn't pay a dividend, all right? So, you know, you can get some gains with UPRO. My members know that I have a good amount of triples on, but they're not going to give me that dividend that I need to pay my bills. You know, I swipe my E-Trade card to go wherever I want in this world because my dividend just pay back whatever I buy, okay? And UPRO doesn't pay much of a dividend, and it's sucking up a lot of my equity. Well, YieldBoost just does that for me now. It buys UPRO. It takes advantage of that vehicle. You know, SPXL is what I think they sell their shorts on. Sell their options against, okay? Sell their puts. All right, if you go to the Granite Shares website here, you'll see that YSBY, it's based on SPXL, I believe, the leverage version of the S&P. I don't believe it's UPRO. I think it's SPXL if you go look at their holdings. And they also give you, a large dividend to make up for, the erosion that you see in YieldBoost. So even though today the market's up and we're beating the market, well, with YieldBoost, well, on a down day, you're going to see YieldBoost get hurt a little more. It's going to get hit harder, okay? And so you're going to have to leave them at smaller amounts so that you can avoid those drawdowns. But when the market starts to rally, you want to think about these triple leverage ETFs. I made a video recently, how to maximize Yieldmax gains. It's with UPRO and some of the other funds that I mentioned in that video. Go check that out. But SPXL, as you can see right here, is what Granite Shares uses. And so, they're going to move up and down more, but in a true up market, they're going to really help you get ahead, okay? Just like a stock would, because these triple leverage ETFs move like a stock would, a really volatile stock would. So if you like Amazon, you want to put all your money in Amazon. Me and Frosty Dog were just talking about that, by the way. Just any stock, okay? If you want to put all your money in it, they're going to move. A stock will move 1 to 2 times more than the index. But triples will always move 3 times more than the index, which is kind of like exposure of a stock. But you can put all your money behind the index, behind a triple, and sleep at night because you know that it's the index, okay? And yet you're still going to get those stock-like gains, those day trading-like gains. But we know day traders lose, 90% lose over time. So you have to stay with the indexes. You have to stay with UPRO and SPXL instead of the stocks. But again, those don't pay you the dividend. So you use Granite Shares because they give you that exposure, a little bit more upside movement on a given day like you saw today. And they're giving you those outsized dividends that then pay down your margin so fast. Margin, once it's paid down, then my account grows by the equivalent amount, just like with a house. My margin gets paid down so fast here, I'm not even worried about the leverage because, every month we receive 40 to 50 grand worth of dividends. So our risk goes away. We're at this point now where we use the margin without the risk, because our dividends are so large. So it's really a snowball effect now. And I had to do this with discipline. I had to do this with Cornerstone mainly because Cornerstone's what got me up to my account size. Okay, I had 15,000 after Corona, but and I've already told you how I bounced back, but Cornerstone gives you the day's gains that Yieldmax and even YieldBoost can't give you, because after the dividend they erode. So you have to keep your capital gains coming in somewhere. So I bring them in from Cornerstone, but again, play those around the rights offerings properly and around their premium thresholds properly. Okay, I have to give you that warning. Okay, I don't get compensated from any fund. I don't get paid by Cornerstone, Defiance, Yieldmax, and none of these funds. But I'm telling you, keep Yieldmax small, because that prevents bigger drawdowns in your account. Make sure that YieldBoost is somewhat smaller as well, because the maintenance is higher. And I'm telling you, play Cornerstone properly around those rights offerings, around those premium thresholds, okay? So I can't stress that enough. But if you do play those properly, then you can really level up and retire now, okay? You can retire early with Cornerstone, because the maintenance is so low for Cornerstone that I can keep withdrawing out of my account, thanks to that low maintenance. Whereas with Granite shares, that is too high of maintenance to withdraw out of my account and park too much of my cash in with Granite shares. Again, if you need help with maintenance, that's in volume 3. So, okay, I have a blend of Yieldmax and YieldBoost. Okay, now we know that they have risky aspects to them. Triple leverage ETFs we're talking about with Granite shares, and high beta stocks we're talking about with Yieldmax. But if you keep your position sizes right sized, then there's room for them in your portfolio for both of them. And then when it comes to protecting them, well, Granite shares actually has puts, that it deploys for you. Okay, so here it is, YSPY. They buy put options to help mitigate against the downside moves in the S&P 500. We also have TQQY for Granite shares. So they actually have puts embedded in them to give you that extra protection. All right, so I like that feature with YieldBoost. And then Yieldmax, they have their short income ETFs, of course. So we've been neutralizing all of our downside with these short income ETFs. With Tesla, we have Crash. With NVIDIA, we have Fiat. Look at these right here. And even with Misty now, we have Winter. So we're getting these huge dividends without the risk, because they're neutralized. But where do we get our gains from? Okay, because they're going to offset each other and not really go anywhere. Well, even if they weren't protected and hedged, Yieldmax won't go much. It won't go anywhere far over time, because they decay, unless you're with Coney, NVIDIA, or some of those extreme ones that can move big. And when they erode with dividends, they still move big. Those are rare. Okay, I apologize for the alerts at Discord, the noises there. It's just been going crazy today. Very active Discord. I think one of the best Discords in the world, and it's free when you buy my e-guides. Once again, my number is free when you buy my e-guides, and Discord's free when you buy my e-guides. Just ask any of my clients. I'm always here for them. Okay, I'm not a financial advisor, but I'm a trainer in basketball. I call them clients, I call them members, I call them family members. So they're all here in this Discord, and also they can access me at any time with my phone number. Okay, so that's the alert going off in the background. But also, again, in Discord, we alert you the Cornerstone rights offering announcement. And here we have a YieldBoost channel now, and we have a Granite shares channel. Okay, so if you ever have questions on how we're playing these ETFs, they're all here in our Discord chat room. Okay, once again, one of the best in the world. We get notified of so many important changes in that chat room. I can't thank my members enough. I want to shout out Akeem for bringing us that change to Defiance. All right, so that shook up the portfolio big. I'm going to do a video on that soon. But thank you again, Akeem and Fox, for bringing those to my attention. They're in the Discord chat room once again, if you want to go check out those latest updates with Defiance. All right, big holding in my portfolio. So the other thing you can do with Yieldmax and YieldBoost, and once again, if you have questions about anything, just leave them in the chat. I'm going to get to your questions at the end of the video. It's going to be a 30-minute video, and if it goes too long, we'll just save the Q&A for a second video, okay, if you're just joining late. Okay, so how much time do I have, Chris? It's been 20 minutes, so I have 10 minutes left. Okay, I just want to say one more thing, that you can sell your own put options with Yieldmax, Defiance, triple leverage ETFs like Granite shares does. So Granite shares sell those put options for you, but you can do it yourself. I use sold puts to lower my margin. So I've lowered my margin by over 100,000. Just with Bitcoin itself here, we have 50, 70, 80, 90. So 90 grand alone plus we have gains in these. So I would call it about 95 grand. We lowered our risk We've lowered our margin and we've lowered our volatility thanks to these puts. People need to not be scared about puts. If you have questions about puts, let me know. That's in my volume 6 e-guide, by the way, if you need help selling puts like I do. They're the safest way to play anything, okay? So stop being daunted by puts. Warren Buffett sells puts on Coca-Cola, okay? And he's the most conservative investor I know. Granite Shares sells puts on triple leverage ETFs, just like I do. So they kind of confirmed my strategy that it's a viable strategy, okay? I don't know if they're watching me and seeing me do this with my own triple shorts, triple longs, and I sell puts against them, but they give me days gains. As you can see here, we're up, 1,000, 2,000, so we engineer some of our days gains with these puts alone. And, the risk is minimal because it would take a crash to be assigned in these puts at the low. And people need to not worry about assignment. Assignment is good. You want assignment because you want to go long the indexes and major asset classes at the bottom. So if we get assigned, great. We make a lot of money going forward. If we don't get assigned, then we just pocket the 100 and something thousand in premiums that we received, okay? And again, it lowered my margin by over 100,000, which lowered my interest rates, which I'm not worried about my rates because I've negotiated my rates down twice. I'm not worried about my rates. They're at around 5%. So I'm not worried about the rates, but they did knock down my margin interest significantly, okay? That's, every 100,000 for me is, 10% on 100,000 is 10,000. So 5,000 roughly. So that's about 500 a month. Every 100,000 I knock down on my margin, I'm saving myself $500 worth of interest payments. But again, it's negligible compared to the dividends that we earn each month. And if you need help negotiating your rates down, that comes with my number, okay? I send you the script whenever you need help negotiating your rates down. So you can sell your own puts, okay? You can sell your own puts. And then, of course, I told you Granite Shares, they buy puts for protection. I also buy my own puts, okay? My members know that I had a few 100% gain during this recent crash. It wasn't a crash. It was just a prolonged downturn, in my opinion. So the options weren't worth much, but we still got a few 100% return once again. And if you need help with buying put options, that's in my Volume 5 e-guide. All of my hedges are in my Volume 5 e-guide. From buying puts to using the inverse vehicles, the short income vehicles, all of those, boxing Cornerstone to lower my margin, to raise my maintenance. Yes, it lowered your margin, but not technically, okay? You still have, when you sell short, you're borrowing those shares, but I'm borrowing these shares short at a lower rate than my margin rate is in many cases. And these, again, lowered my maintenance to 5%, okay? If you go look at my maintenance in Cornerstone with these box shares, 5%. And I'm hedged to the downside some if Cornerstone were to fall. We had a much bigger position in our box, but we removed it after the Cornerstone N2 filing. So once again, if you need help boxing or hedging your portfolio or insuring it against any kind of downturn, that's in my Volume 5 e-guide. I have all kinds of hedges. But with Cornerstone, we box there at the highs because we got the N2 filing, at the highs in our Discord. So we just knew to unload there. And members, if you didn't unload there and you're still, owning it here, I've been through that before as well. I'm just buying more, around the lows, of course. That's how I always got ahead. If I missed something in Cornerstone, I always just doubled down and it still worked out. But always make sure to keep Cornerstone, at a certain percentage of your portfolio. I keep all my allocations at a small enough amount now to where nothing can hurt me. You can view my portfolio at any time in YouTube, okay? You just go over here to the membership section. You can see my portfolio at any time. All right, so the allocations there, the way I allocate everything is key. All right, so what's the safest? Yieldmax or YieldBoost? I've laid out a few different talking points for you to consider, okay? And I hope you review this whole video if you're just joining late. I want to repeat things and summarize things, but we don't want to make the video too long, all right? I don't want to burn anyone out. I just want members to have a candid discussion here around Yieldmax and YieldBoost because, or using a combination of both. I would like to hear the chat's opinion because we need indexing to get ahead. Yieldmax and YieldBoost accomplish that, but we're using margin. And so we want to use things conservatively on margin. Well, they also have ways to protect themselves. And so, without summarizing everything, because I want y'all to see this video, if you're just joining it late, I want you to go ahead and watch the beginning if you can, because there's a lot of stuff that I laid out in here. Overall, it seems like there's a way to win with all of the ETF managers, okay? Defiance, Roundhill, Cornerstone, Granite Shares. It's a win-win for everyone. You just have to allocate them all properly, okay? And then follow the rules when you're using margin, okay? So we're living financially free out of our brokerage account, still using all those funds, Yieldmax, YieldBoost, Cornerstone, Defiance, with margin, okay? We're still earning $560,000 in dividends. We took a cut in dividends to lower our margin to 360, but because we had to do a shakeup recently, there were some changes with Defiance. But, we're still outperforming. We're still earning a hefty amount of dividends. And now I can just kind of do whatever I want with that lowered margin number because it'll get paid down so fast. It's really the best lifestyle that you can have, okay? It's more certain than a job. Your dividends are coming in. These are coming in from 4-star funds, okay? Or in Yieldmax or YieldBoost's case, funds that are built on volatility, which we'll talk about in another video. But as long as the volatility stays and the IV stays up high, then the dividends stay up high. All right, so I really want to stop seeing those questions about, hey, will these funds even be around anymore? Like if they just go down and down and down. They reverse split, and reverse splits are cosmetic, okay? So for all these reasons, you need to be more, aware of how these funds work, and you need to use them all to your advantage to live financially free out of your brokerage account. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. All right, so I'm going to go ahead and get to the questions now. If there are too many, which it looks like there are a little too many, I'm going to have to save this Q&A for the rest, for the next video, okay? So we'll do part 2 tomorrow. I'm going to record all of your comments, okay? Appreciate you being here, Josiah, Siler, Josiah. Really appreciate, Tim, Jetta, my admin from Discord, and Frosty Dog for being here, okay, and Albert for joining the Fire Portfolio. Thank you, Albert. I really appreciate y'all, okay. Amber, good afternoon. Ryan, Chuck, Jose, Jennifer, Wayne. I can only start here, okay, at the top. Christopher, Jonathan, okay, you'd love to hear me talk some more about using in-the-money leaps calls, the pros and cons. Let's do that, Jonathan, okay? Let's save that for the next video. I'll keep the same title, the same everything, but I'll just say part 2 Q&A, all right? And we'll get to the rest of these, okay? Because I don't want to make the video too long. Jonathan, do you think YMAG is going to recover? Okay, another great question. All right, and happy to see Todd made his comparison video. One of the few YouTubers I trust before I make decisions when I'm on the fence with my investment. Thank you so much, Nen, okay? Sammy, hey there. Amber, you want to invest in YieldBoost but not enough history. I know I went to the conference, so I hope it's not a push of product. Don't take it the wrong way, please. No, totally, Amber. Well, I'm just going by price performance today. YSPY is up, more than the market. I noticed that at the conference. I know the dividends are going to be huge, but I know that the maintenance is high, so I can only put so much into them, Amber. They're vying for position. Some of those higher maintenance Yieldmax names versus YieldBoost. Okay, they're both competing for the middle ground in my portfolio. All right, so yeah, I'm only going to talk about things if they work for me and if they have an impact in your life. Okay, the maintenance definitely will. Okay, and the inner workings of these funds definitely should be brought to light so that we can make the best decision possible. Okay, we'll talk about that on the next video. We'll talk about the outcome, the conclusion that we've made from these two funds. Plus, I'll get to all of your questions. Okay, Denali, I see you have another great question there. So I can't wait to get to these. All right, so Nick, I see your question. Amber, Humbled, reloading Cornerstone. Let's talk about all those. Tiger. My volume 5 and 6 are amazing. Thanks for those. Just got them yesterday. Glad you like those, Tiger. Yeah, I saw that you were grasping it very well too. Oh, Big C, welcome. Okay, glad you upgraded. All right, I hope you enjoy. I believe it was the video before yesterday. All right, I have all my latest updates in there. Thanks again, Big C. Major Sam, good to see you. Okay, Humbled, you've been put off by using puts, but I'll look through your e-guide. Yeah, these are different kinds of puts, Humbled. These are not zero DTE where you lose a lot. These are the safe way. You're buying at the bottom. Don't you want to own the indexes, but at the lows? All right, so that's what Volume 6 is all about. Thank you, Lance. Great talk yesterday, Lance, okay? Jeremy, what we talked about, Lance, that helped me structure this video to where we're going to do this video, the idea now, the content now, and then the Q&A for tomorrow, all right? Trader, new member here, still need to get on the call with you. Let's do it. Call me. Okay, text me first, Trader, and then we'll set up a time after that. All right, so I look forward to joining y'all tomorrow, all right, around the same time, and we'll go over those questions, okay? And we'll get to our decision, okay, when it comes to Yieldmax and YieldBoost, which is the safer, better way to play a market recovery. All right, I hope you enjoyed this video. Nick, how was the Defiance meeting? I have their interview next Wednesday, but I had a podcast today with Ari. It was somewhat different. Again, go check out his channel if you get a chance. He does a lot of stock stuff and ETF stuff. But you can follow me on Twitter at any time if I'm not making videos on YouTube. Okay, here's the my @ symbol here, and there's my handle. And again, when you buy my e-guides, you get my number and Discord for live. So call me anytime you have questions, okay? I'm always here for you. All right, just email me and I'll send you back my standard template that I send everyone. All right, I hope you enjoyed this video, everyone, and I'll see you on the next one. Take care, everyone. Bye-bye.